We've got Hamish McIntosh from One Haven Property Partners. We work really closely with them at TSC Mortgage Brokers, and Hamish and I have had a couple of catch-ups now to chat about the market and just what's happening around Australia. Importantly, One Haven focus on buying property, helping people to buy property based on the numbers. And I think, Hamish, I always enjoy talking to you about what markets are moving, what's happening in them. And wonderfully, it's all database. So I love that you guys take that approach, and that's one of the big reasons that we love to deal with you, and a lot of our clients are now dealing with you also. So welcome.
Thank you very much. No, mate, excited to have another chat with you, mate. It's been I think last time we caught up, there's been a fair bit happening in the market since then around locations, assessments, rate rises, which I know some stuff we'll discuss about today. But yeah, it's been a great period of time for us. Obviously, we are a Melbourne-based company, some huge activity now happening down in our own market, which is great. But there's no doubt positivity around Australia. It's been a great 12 months for the market. And yeah, keen to obviously explore a bit further today.
Yeah, let's talk about markets that are moving at the moment. Obviously, Melbourne's got its own set of metrics that are happening at the moment, and Melbourne property, as I understand it, has got a lot more affordable in the lower range. Obviously, lots happening in around taxes and things that have happened down there. It's quite a topical thing for people to talk about. But I know that you've done your numbers on that too. Did you want to comment on specifically that market or any others that are working around Australia at the moment?
Yeah, definitely. So I guess as a company, we've been doing a lot of work, I think like most property companies, interstate in the last 3 to 4 years. So a lot of work in Queensland, which has been a huge growth market for a lot of our clients, a lot of work in Adelaide, a bit of work in Perth. But there's no doubt now we're seeing, I wouldn't say it's a tipping point, but just a few alarm bells. Like, I'm sure everyone on the call who was listening, people would be aware of areas like Ripley and Greenbank and these areas in southeast Queensland. And we were selling house and land there to clients 4 years ago, 5 years ago at $450. That same property now is selling at $950 to $1 million. So there's a bit of a tipping point. Do you think to put a new client into a property now that's $1 million that was $450 4 years ago? I'm apprehensive, right? Now you want to try and time the market. So the point now where Melbourne, which I've never said again really on record, but that's the reality of the situation we're in, it's pretty much one of the most affordable markets in Australia, right? Our median price point is a couple $100,000 cheaper than Brisbane, depending which data resource you look at. Cheaper than Adelaide, cheaper than Perth. All these things that have been happening over time, like we're very similar price points to those locations. If you go back through history and look where Melbourne's price point was pre-COVID, this is all not making any logical sense at the moment. And to make your point before about many bad changes within the Victorian market, it has brought in some fear. And I think it's really important to understand what's real and what isn't in regards to the Melbourne market. And a good example is the land tax question you brought up. Like, when you really look at it, right, the land tax threshold in Victoria has been decreased. It has, right? So how that works, guys, on the call, you used to get essentially a free amount of money for your land value, then you'd pay your land tax amount on top. Melbourne's threshold used to be $300,000. It was free. And obviously then if your land value was $500,000 on your property, you'll pay land tax on $200,000. They've decreased that down to $50,000. Right? What a fantastic incentive. Thank you, Victoria. Right, but the realism is that your land tax bill has gone up. And when you really look at the numbers, if we buy a purchase price of a property at $750, and your land value is $400 to $450, your land tax bill is going to be anywhere around $1,500 to $1,700 a year, right? Which is tax deductible, so it's costing you $1,000. Right? Most common people buy one property. Is that going to blow their budget? No, it's not. Does it impact people that own multiple investment properties, have big holdings all around Victoria? Yes, it absolutely does. But how many Australians own 5, 6, 7, 8 investments, right? Obviously, it's very, very minimal part of the population, under 1%. Right, so we've got to look at this and analyse it in detail, and that's why we are seeing the Melbourne market start to move. There's no doubt about that. We're seeing some growth, affordability. The interstate markets will keep pushing forward, but they have to slow down at some point, right? And again, I know there'll be a lot of Brisbane people on the call. Brisbane's moved at 90%, nearly 90% growth over 5 years now. Huge growth.
Yeah, it's been strong. We're seeing a lot of calls in the back half of last year, and certainly to start the year, the phones are ringing hot with rate rises, but also people have got equity. This is the wonderful thing that we're seeing in any markets that have moved, which I know, the Perth market's moved, the Adelaide market's moved, Northern Territory I heard recently as well. They've had some really good growth up there. So everyone's got equity, and that's, it's an opportunity that people, particularly a lot of our client base who are looking to improve their asset position or their net asset position through property. They come to us because we're property centric in the way that we go about running a finance broking business. So can you talk to the equity part of it? There's super. Inside super, a lot of people have got superannuation either held with a retail or industry fund, or we've got a lot of people now that are setting up self-managed super funds because it's a lot cheaper to do it. It's a lot cheaper to run it. Do you want to just comment on what you're seeing as far as the investors that you're working with? They're trying to grow their overall portfolio. Are they mixing some super with outside of super? Is that the general play that you're seeing?
Definitely. So structures are really key, important aspects of growing any portfolio. Not only it's just about your super, about buying out a trust or company structures or whatever it is. If that's your plan to create wealth over time, your plan at the start restructure is so important, right? Because as you know, Matt, you're a broker, mate. Obviously, that your tipping point in your personal name for borrowing capacity will hit the capacity at some time. So you need to think of diverse ways to keep growing your portfolio, right? And there's plenty of strategies to do that. There's no doubt the interstate markets where we work with clients, right? And no doubt even Queensland residents that live there, same as Adelaide and Perth, they've experienced some stuff in the last 4 or 5 years, which they haven't actually got to experience in their lifetime. Because pre-COVID, their markets were a bit more, they were ticking along, they're still going okay, but nothing like they've experienced in the last 3 to 4 years, but now they're sitting on hundreds and hundreds of thousands of dollars of equity, wondering what to do next, right? So there's no doubt the equity conversations are a really key one. Releasing it out, keep growing your portfolio, look to get a balanced approach and diversify your portfolio around Australia. It's a very important aspect to it. SMSF's a huge one. There's no doubt that's definitely the biggest one I see in the market coming through in terms of inquiry from one of our referral partners that we work with, the SMSF setups. I would say us as a business 4 years ago would maybe help 1, 2 out of 10 buyers would come through us for SMSF. It would be over easily a third of our business now helping clients buy properties for super funds. Right. And it's a really important advice, I believe, we give clients to make sure you're buying the right properties, because your decision making has to alter a little bit from what you buy inside of your super compared to what you buy outside of super, because of how the regulations work and what you should buy in terms of rental income and yield versus growth outside of it. There's so many factors to make sure you get right. But there's no doubt that's the biggest one we see coming right through at the moment is the SMSF conversation. So for us, it's a very diverse range of clients we work with. The strategy is critical. And obviously for yourself. So there's no doubt the rate rises for us as well have had a little bit of impact. I'd be keen to hear your thoughts, Matty, around what you've seen at your end in regards to your client base, but even more around structural advice when we see rate rises. That's had a bit of an impact. I'd be keen to hear your thoughts around what you're seeing with your clients and what they're saying around and what they need to do on a personal point of view.
Yeah, it's an interesting one. Obviously, the back end of last year and even through most of January, we expected rates to be stable, if not a small reduction. Obviously the inflation numbers came in, unemployment numbers, and the RBA have upped the rates by 0.25. So that stimulated a lot of conversation. We're talking to a lot of people about splitting loans, so partially fixed, partially variable. We specialise in borrowing capacity. So we really do. Our niche in lending is around helping people build portfolios by structuring correctly. So we use personal income, personal names for purchasing, sometimes in one partner, sometimes in another partner. We use entities, we use SMSF. So we've got a bit of a multifaceted strategy to maximise borrowing capacity. So, one of the things we love about working with you, and our clients have certainly given us that feedback, that you understand the property piece, we understand the lending piece, and we can help them acquire more assets in better locations where the numbers support it and the growth supports it, because all we're seeing is growth in equity. As we're revisiting balance sheets for our clients from last year to this year or a couple of years ago, we're seeing humongous growth in equity, net equity. So it's been an interesting one. We're certainly doing a lot of borrowing capacity work at the moment, but even more critical than ever that I think people need to speak to a broker that haven't, if they go directly to the bank, they're getting one offering, one credit policy, one borrowing capacity calculator, and no grey. We've got a lot of lenders that are particularly in the non-bank lender space. We just had a look at our book for last year where we wrote our loans, and we wrote a smidge over 300 million for the year, and 88% of that was with non-majors. So
Yeah.
it's interesting when you look at when your focus is how much can I borrow to buy more property to create more equity. There's a whole lot of solutions out there that people are missing if they're just staying with their traditional lender.
Yeah. Oh, there's no doubt. I guess you talked about the growth of Queensland. I do this for a living, man. It's mind-boggling some of the results that we're seeing. We do reviews every 12 months with our clients, and I don't know what to do at times. Sometimes I just sit back and I laugh, and I think this is just unbelievable what is happening. And I guess for Queensland, it's not really slowing down anytime soon at the moment, really. Like, to think Ripley in these areas are now worth, $1 million. Like, I saw resales in Ripley now at 420 square meters for $1 million. Like, that's crazy numbers, right? It's mind-boggling. So, but for me, I guess it's around, this is where you capitalise for your clients who've got up there, they've got equity. This is where you can really grow your portfolio really quickly. You've had the opportunity to get in one of the best growth markets around Australia. We talked about advice and structure and all the things to get that right. And then you just keep, your journey's away. You can get to financial freedom or property, whatever your journey is you want to get to on property investment. You're a long way down the path now due to what's happened within that market where you guys are.
Yeah, and we're certainly seeing that. Like, we've got a fairly large client base and a larger database that we feed into, and there's people all around Australia, expats overseas as well, that we're seeing that are the ones that have been aggressively building their portfolio have generated the most amount of wealth that we've seen probably in the last, particularly in the last 4 years. We do the reviews of the clients as well, and we talk about where do you want to go, what are your goals now. And as long as they can see that equity growing, their appetite grows. And they're looking for ways to add one more property, one more deal. So yeah, I think, look, we've got exciting times ahead. I think this year we may see another rate rise. We may see another 2, depending on what the inflation data looks like. It's going to be more important than ever, I guess, for people to assess their options, their lender options, but also to assess the numbers in the market. And I keep coming back to this, but I love that you guys base all of your decision making based on macro. It doesn't matter whether it's which state it is, where the client is. You're just buying on the numbers to get the growth so that you can buy another property in a year or 2 years' time.
Yeah. Well, it's definitely for us, it's a non-emotional decision. It's just around wherever the data takes us and what the best decision is within the market, and that has been interstate. But there's no doubt for what we've seen, like, affordability is the biggest reason. Rate rises, it's no doubt going to have a more impact on people's decision. If your borrowing capacity's dropped by 50 grand or whatever the rate rise impact has had on you. Personally, I think it makes markets like Melbourne even more appealing given how affordable it's become, right? So it might alter people's decisions from, say, spending 900 in Brisbane, which their budget was, maybe said, I don't want to spend 800 now because of the fear of more rate rises coming. So all of a sudden there's less buyers going to those markets, and then they're putting more compression on the Melbourne market because that's just where their budget has taken them. So we keep following it all through. Data doesn't lie. You look at historical evidence of growth. Melbourne was a great growth market for a long period of time. Now it's sort of plateaued through COVID. I live here. It's been brutal, right? No doubt it's been a rough few years, but we're starting to come out the other end of it, right? So
yeah, I saw some migration data the other day. Sorry to interrupt you there. I saw some migration data, and it actually, for the first time, looks really positive. Population numbers coming into Victoria.
Yeah, it is. Across the board, our vacancy rates are back to pre-COVID levels. All this thing is showing a bit more stability, I suppose, and interest within our Victorian market. So yeah, migration is strong, population is strong. Like, you look at our internal migration ladder, like, it's a lot of people, the old conversation around more people moving to Queensland than Victoria. There was a report done by CommSec or CBA a while ago that there's more people moving to Greater Geelong than Sunshine Coast right now. So, in and around that, Greater Geelong's a great pocket. For people who don't on the call, really good way to, I guess, as a comparative for Brisbane would be, say, Toowoomba for you guys in regards to it. All the people know a lot about Sydney, Newcastle to Sydney sort of feel. Geelong's got a really good market down here, which I love. I think it's really good value down in obviously, and it sort of represents a lot about where our world is headed. The work from home lifestyle, all the things.
Yeah.
Geelong offers a lot of that, as well as have great amenity and schooling and health and all the things you need to raise a family. So yeah, no doubt Melbourne is finally, as I said, Matty, I live here, mate. It's showing the signs of a market that's heating up after a pretty rough period of time. And there's no doubt that people's decisions making in the market is shifting and altering back towards Victoria, which is great for us because we are a big, strong market, and we need to get back up through that pack where we belong.
Yeah, well, it's opportunity. I guess that's the main thing, isn't it? That you're identifying where the opportunity is right now for people that are looking to, or even just thinking about, okay, what if I did that? What would it look like? So if we've got people that are interested in having a chat to you, obviously there's no obligation. They just want to understand what their options are, what it would look like, what sort of service you offer. We obviously try to pre-vet a lot of our clients that are looking to do this, so we'll no doubt have some pre-conversations with people. But yeah, I love that. I love that you can give them a broad approach to the market, whether it's South Australia, Western Australia, Queensland, Victoria. It doesn't really matter where it is. It's just where the numbers point to say there's infrastructure. I know that you do a multifaceted look at where to buy now. Where is the opportunity today? And it might be different in 6 months' time. So we'll continue to work with our clients.
Yeah, I guess on that point there, that's why we've designed the business to be. There's so many property companies out there, guys. Again, anyone listening here, if you are looking at property, I'm sure your algorithm and TikToks and Facebooks are just full of every property company under the sun with different opinions. My business partner, I've been really clear on this, to design an holistic model, right? So I don't want to be pigeonholed with one type of stock. So we do every service. So we do off the plan real estate, we do established real estate, we do SMSF, we do all of advisory. We're licensed in all states. So I believe it allows us to give a pretty non-biased approach around where we think you should buy, because we do every service and we can just direct you where we feels best. We listen to what clients say. Yep, I'm hearing what you're saying. I'm hearing some pain points. Here's probably the market's going to work best for you because of X, Y, and Z. Right? And that might be cash flow growth or whatever it is. I'm going to use an example at the moment. I've got 2 different clients I saw yesterday. I think it's a really good way to compare it. I saw one client earning close to $1 million, single, no obligations. The next client I saw has got 7 children between the ages of 3 and 16. Right? So I guess for yourself, how can you possibly compare them and put them both in the same conversation in regards to strategy? You can't. You must then alter and look at different markets for different clients. So every strategy is always tailored. It's always individual, and obviously the purchase of what you buy will always be different depending on what the main pain points or the trigger points are of clients, to make sure the property marries up all within this. And yeah, I love what we do. It's the company's growing, and I love working with yourself and your clients, Matty. They're awesome clients, awesome people. We'd love to keep growing it.
Yeah, we like to have conversations with them just to work out, we take a bespoke approach like you do. And I like that you can work with what do they want, what are their goals, what are their, what's their risk profile. So we do a lot of that kind of work with our client base, and we love to have those conversations about what does tomorrow look like for you? What is 10 years? When do you want to retire? What do you want that to look like? So I think it's important that, together we're providing a holistic service that's right from finance pre-vetting and working out what their position is in life and where they want to be, to then going to the people that are experts at it, which is not what we do. We do the finance piece, and we help them to release equity and structure in the right way to get maximum opportunity. So, sure. Hamish, wonderful to speak to you again, mate. And
always, mate.
Obviously, we'll be doing a lot of work again this year. So we've got a number that are already working with you guys and having chats. So we'll get this out to our base and just let them know that there are options out there that they're looking to find out what they're able to do, what the numbers look like in certain areas. Then we'd certainly recommend they have a chat with you guys.
Perfect. Thanks, Matty. Thanks for having me, guy. And I look forward to catch up with anyone who's this call, and we'll be in touch in the future.
Awesome, mate. Thanks for your time.
Thanks, mate.